All right, folks in both rooms, boys and girls, and ladies and gentlemen, glad to see you here on this Thursday before non-farm payroll, August 3rd, 2023. My name is Dr. Gregory McLeod, and I'm the founder and CEO of Elite Traders University here in Las Vegas, Nevada. And we're going to be trading gold. Okay, I'm going to actually go ahead and share my screen with you, and we can get right to it. Let's go ahead and share. No, we're gonna record this in the cloud. We're gonna we're gonna share our screen. All right, and there we go. Okay, hopefully we can see the screen. And I'm actually gonna take another short position here on gold. We're short at 1933.21. We got some positions open, and we're looking for a move down to Fibonacci support. We're going to move down to 1931.15. We'll see if we can hit that area. And we did a, most commonly watched pattern is a double top. We had double top in this 1938.40, lots of resistance in there, and then we had this kind of precipitous sell-off, kind of a, and we're down to we got down to the 1933.79 area after hitting a high about 1938, and we're looking for I've used dual time frame analysis for those of you who are not familiar with that. We actually look at the higher time frame chart, maybe an hour. Our hour chart is clearly in a downtrend. See the downtrend line below 200 moving average, and so we have a downtrend bias. So even though there have been rallies, they've been short-lived, and the red candles have pretty much dominated. We kind of like been in my winter circle class. We have we actually took these trades earlier, and so we are looking at gold possibly coming down to retest this support here. There's a midpoint S2 pivot 1930.94, and we have 100% expansion based on the Fibonacci. And I can show you how I make those, how I do that. In fact, I can go ahead and start a clean chart. Let me go ahead and objects list. If you have too many lines and things, you can always do Control A, click delete, and that will clear off all your charts and start you from there. So I'm going to take a Fibonacci, this is an expansion tool, and we take a move from the swing high down to the low, and then we can double tap that. I'm sorry, I had a message come through. Okay, back 1973 by 04. it's noon. I guess everybody is we're trying to make this our money making noon. Oh, I grabbed that by accident. Trying to draw a trend line across the bottom here, and I'm looking for. Oh, that's not what I want to do. Okay, let's do that. Okay, so we got a couple of positions in the money, and a couple of them are out of the money. And so we're looking for a price to basically we have a large tide, this market tide of red of selling, and then we're looking for prices to like go ahead and come on down and break on through. So I got a couple of things we have to break on through to the other side, break on through to the other side, break on through, and then we're looking for a resumption of this downtrend. And notice how it's starting to flag out. That's what we call when we have a price going counter trend, and then we have a bear flag in real time. So it's struggling against this market tide. This is a 21 moving average. That's a 21. And color changes. It changes from blue being an uptrend, and it changes red when we're in a downtrend. Okay, we're getting a little bit of spike action there. And there's a 2.618 expansion target there. We make this, and you can. So the way we take the expansion targets, we take the high, the first low, and then the next highest, or lower high. We connect those 3 points, 1, 2, 3 points, and that projects to like targets like 1.618. Which is 161% of this move here. And then there's a 224%. See, we went right to the 224%. And then there's a 2.618, which is a common final resting place for trends before they possibly reverse, right? We're looking for a price. Okay, we're coming back in the money. And let's see if we can come on, break this rising support line, and come back and retest the low. 1932.85 will be our first target for these other positions, and then we look for maybe the expansion down to the 2.618. And I have the YouTube muted because it creates an echo and it's like lagging. So you're seeing you're probably looking at the price action. If you look at my charts and they don't match your charts, it's because that the feed is delayed. So you would think YouTube and Google would invest in some architecture that makes it go a little bit faster, more real time. But we alas, it's better than nothing. So see the looking for the chat box if you are trying to communicate with me. 1934-11, and it's kind of hanging around there. And didn't want to like sit around in trades for like an hour, kind of like the initial action that we had. We closed out a bunch of trades to the south side there, and we got and we're rallying up to support now. You can take fibs. You're probably saying, well, Greg, these are expansion fibs, and I'm going to do a little teaching here. Hope you don't mind. I'm going to take a fib down from the high down to the low, right? And these are your retracements. And when you see retracements and expansions overlap, like right now, you're seeing the 618, the 1.618 overlap with the 23.6, and then you have the 38% retracement at the 127% expansion, both kind of overlapping there. Okay. So we took a whole bunch of them down here. So we're kind of retracing. And what I'm using is I'm looking at the higher time frame chart to be able to stay in this trade short and to look to add in the direction of the shorts. And a lot of people might be tempted. Well, Greg, this thing broke the trend line. You know, I can get long. And you could have don't get me wrong. You know, you can make money. This is a counter trend move, considering that we have something called a multi-trend bar, a multi-time frame trend bar. And I'm not sure why it doesn't have the text there, but it goes the monthly, weekly, daily, H4. So the downtrend, and then H1 is neutral. The 1 hour chart's neutral. The 30 minutes neutral, and the 50 minutes neutral too. However, the 5 minute is bearish. The 1 minute is bullish. So you've got this kind of this is, symbolizes this retrace, right? So we're waiting for this to come back in line with these others, right? And it can be kind of nerve-wracking because you're like, you think all this is going up, and if you're looking at your phone and all you see is that, you say, oh man, this is uptrend, man, this thing is going to go to the moon, right? And that's why I call that pirate trading. If you're just looking at one small section of the, pirates have an eye patch, right? And why? Because they got maybe shot in the face with a musket, and then they have one hand, they have a hook because maybe a shark or a sword cut their hand off, and they have one leg because a shark ate their leg. So they're kind of handicapped. And so we don't want to be handicapped when we're looking at charts. That's probably one of the biggest mistakes that traders make, is that they're looking only at one chart because it's convenient to like, oh, I'm on my phone, I can do this. But if you're missing out, you're looking at this as a uptrend, but really this thing is a downtrend, right? And if you go back even further, you're looking at this, just going into a 1 hour chart, and you can see lower swing highs and lower swing lows. We're in a downtrend, right? And so your uptrend that looks so bullish on your phone is really just a small blip in face of this overall this move downward that we're making, right? We're working with that, and we could work our way down even lower, down to the in 1892 to 1889. I mean, not right now, not today, but over time, we're making, if we're stair stepping down, new lows and our counter trend highs, and then counter trend and drop, right? I'm sure when people were like looking at this, they're like, a generational buy, and then it dropped. Okay. So we are retracing hard now. The 38% retracement is at 1935, the figure. And this is where it maybe takes a little bit of patience and looking for, oh, I don't want to do that. Let's take profit down here. Yeah, I want to stack my take profits down here. Right. Trying to grab that line. Trying to grab that line. But yeah, good. I grabbed it. Right. So, and if you are watching and you're delayed, no, this is not the time to get short yet. I'm already short, so I'm just kind of like holding on to it because I've got this counter trend rally. But you would want to look, if you're looking for fresh sells, you want to look for maybe 19. I'll tell you what to do, but if I were just looking at this, oh, Greg, you're negative, man. You know, it's like you're just in a hole right here, right? Then I'm looking at a break of 1933.94, right? We're breaking the trend line, we're breaking the last swing low, we're breaking below a moving average, and that would give us a more of an indication that we're going to be heading lower. Now, also caution though on any trades going on right now is it's non-farm payroll tomorrow. Okay, non-farm payroll is one of the most widely watched economic announcements. You know, it's like the crop report in trading places, right? Clarence Beaks with the crop report. So this is a very, very big announcement. And so there's gonna be a lot of positioning going on. If it comes out higher than expected, it could mean that the Fed will have to continue to raise rates. And that could be bearish for the stock market, more so than it is. And it could also shoot up the US dollar versus a lot of different currency pairs. So right now we're in this counter trend zigzag. We'll see how high that goes. It may go. We're at the 38% retracement comes in at 1935, and let's see if we entertain that and make a U-turn in that area. If I come on market with a rectangle, but sometimes after these guys, they want to take price straight up like that. And there was, and don't get me wrong, I've traded the counter trend, but lately, in order to like increase the win percentage, being able to follow this lazy river, like, okay, got this long red, and then when it goes green, just get back in the lazy river, just kind of coast on down, right? So that's a less kind of a less stressful way of trading. Then you get in this move before you go to bed, right? You get in this move before you go to bed, and then you wake up, and the thing breaks down and it drops to a new low. That's the issue that we run into, right? However, if you took something like this and you went to sleep and you woke up, well, okay, maybe you gave back a portion of it, but you're still positive. Why? Because you're in it with the trend, right? My 1931, I'm going to probably modify that. Or actually, I'm probably going to I'm gonna modify that, right? So here we go. We're tagging the 30. Now it seemed like we went a little bit higher than that 38. Where's that? We gotta move this rectangle out of the way. Move it out of the way. Go away. Go away. Okay. So the 38 and the 200 simple moving average. That's why I have a 200 on my chart. Price went right to the 200. And eked by the 38% retracement. And when you're looking at these candles, and these are called Heikin-Ashi candles as well. People say, Greg, your candles look different. It's like, yeah, these are Heikin-Ashi, and still sounds Japanese, right? But this kind of smooths out the trend. You kind of like, okay, we can look at easily how, without all those bullish engulfing doji spinning top and all the other hundreds of different candlestick patterns there are. I like keeping it simple, and I like saying red, green, red. It makes it really simple. Okay. Somebody goes counter trend. Then that's the only look we're maybe it's tapping out, it's trying, they run out of gas, right? And I would draw an accelerated trend line or a speed line across this because price kind of like accelerated. And now we got one red candle. And you're gonna watch the amazing color change. $34.82. We got a break. And notice all those little green candles we're getting, they turn gray. We're waiting for this the 1 minute candle, this one last holdout to either turn gray or red. So I use lots of confirmations. I got color changing indicators. I have color changing candles. I have color changing trend bars. I'm trying to get as much confirmation. And again, maybe some of my earlier videos and things, I jump on this counter trend trade, right? Now, I've got a lot of things going on. Well, this thing turned red, 2 candles. Well, I put a little short in there, and then look for that to coast, see if that will coast down. It broke this first trend line. I'll be more comfortable if it broke this other trend line here, right? But it came to 38, right? The 38% retracement. Did I stutter? I said, was it 200? And he said, well, Greg, it went a little higher than the 38. It went very little above the 38, right? And let's see if these guys, the Bears, take over. So it's like football. I can't wait football. We got Cleveland Browns and the Jets. I did not know that Aaron Rodgers became a Jet. It's like, I don't really follow, I don't follow the sports thing until actually the opening day. And this is what sometimes happens, right? When you have color changing candles, it's like, Greg, I'm not changing red right now. It's like fumble, right? The guys have the ball, they're running with it, they fumble the ball, and the red team gets the ball, right? And then you think they've got the ball, and they fumble it, right? You got this goal line stance here, right? You got the defensive backs all lined up at the 38, the line of scrimmage here. And when they breaks, I like the guy from he goes like this. He goes, he could go all the way. So I like to see this, see a run down if you get a nice big break. So we got maybe one little. Let's see if we break the support right here. It's like, as soon as I move my cursor over, it jumped up again. Break 34.65. This was this was the red trying to hold the ground right there. So let's see if we break down there. We have high, low, and if we have a lower high, that's going to give the Bears a little bit more confidence to come out and play. I haven't traded lunchtime in a long time. I'm a little rusty. Usually I was greedy. I'm a greedy bastard, right? He's like, I gotta go back out there. It's like I can blame Jamie. Jamie's one of my top traders, and he runs my room. And he says, Greg, if you're still short gold, you're making money right now. I go, yeah, I did. I made a lot of money. And I get back, I go, let me turn the camera on. Let's see, lunchtime, So that's like, well, Gregory's stuck in these trades, I think. Yeah. But it's like a good lesson on trading the counter trend. If you trade the counter trend, it's like, oh, we're shutting this off. Hey, thanks for watching. But I think that people will be more profitable over time, especially if you're doing these prop trading challenges. That this is good if you can sit in front of the computer and take the counter trend, because the trend's your friend till it ends. The counter trends don't last very long. So you made fast money, but you gave up a lot of your time to sit in front of it. Okay. But if you want to do like a challenge and you want to pass a challenge, I'd wait for the counter trend to end and start building positions at the end of the counter trend, which is usually at a 38 of a swing. And when that thing starts breaking down, just let it go. And if I move from 34 down to 32, a $2 moving gold, you're going to be pretty much, and you start catching, you take these bare swings, any one of these swings will help you pass a challenge. No, except for ones that you can't hold for several days or something. They want you out or something like that. And some of them have requirements that you have to trade 5 to 10 times, right? You can't just put one trade and make all your money. So you go your position size down to 0.01 and just hit 4 of the trades just to satisfy their requirement, right? Okay, so this is another thing. So we have a double top, which is, double top. A double top counter trend is usually pretty good. A test of the 127, another test the 127 with long wicks, and that's the only thing you really need to know about Hakinashi. There's like 3 things really. If it's a shaved bottom, the Marabutsu, just like in regular candlesticks, that shaved bottom means that we're have a strong uptrend. A shaved top, we have strong downtrend, right? And then if we start seeing dojis or what we call spinning tops in those areas, that usually indicates that the trend is tiring out and a reversal, some type of reversal is underway. And so we're seeing, we went from high volatility, now we're in this low volatility kind of range. Ooh, we got a little break above a high. And then you wonder if that is some type of a bait, kind of a bull trap. It's like, Greg, it's a breakout, man. It's a breakout. Buying the breakout. It's like you're buying your breakout against a counter trend, right? It's like you're going to drive across this river in your car, and being swept. You're going to be swept downstream, right? So I can make it. It's like, you have 4-wheel drive, and you have big tires, but the market tide might take you down. Now we've had long wick candles, and we have a shaved top, and this is so we'll see. If this is bait to bait out the 35.16. And we're above the 38. Now we've got close above the 38. We have 1, 2, 3 close above the 38. And we're above the 200 as well. So then it starts to get a little dicey, because now we've got open space, and then the 50 and the 100 are our next targets. And you start getting the 50, then you get the Fibonacci of last resort, the 618, and it's like, well, gee, you're almost back to the old high, right? And you do have the 618. You have those, and if you were doing supply and demand zones, if you were even using that, then that would be a zone right there. And it's like, do you really want to hold that through that zone? And the only thing that's what was holding me in this trade is that we have a downtrend, okay, and we have a downtrend in our favor, right? When we're going counter trend and we have these large stops, that's that can be a real issue too, right? Because when this thing turns, and you make a mistake, then you pay for your mistake really, like, some people say, oh yeah, I just hold it. I don't even use a stop. Like, yeah, the no stop thing. I mean, I don't have a stop. I have like a mental stop. And well, he's crazy. He's got mental stops, right? But mental stop. Let me tell you a good argument for the mental stop. The mental stop works in and if you are in line with a higher time frame trend. I'm not talking about 15-minute trend. I'm talking about hour, walk this up to a 4-hour, right? Walk this up to a daily, right? Walk up to a weekly, right? I mean, we're just getting started for our, the weeklies just turned red, right? So, I mean, you got this trend line break on the weekly, and we haven't finished the week, right? Weekly, daily, 4-hour red. So we're in that line, right? And if you were taking a position trade or swing trade, let's say we were swing trading, and you're not necessarily swing trading. Ideally, this is kind of like swing, like day, looking at the day trends and then getting in line with that day, weekly, 4-hour trend, which is bearish. And now we're at the 50. And see, now we've got a red candle, maybe got some exhaustion, right? And you would like to see price break a trend line. And, if I wanted to apply, add maybe another position there. That's how stacking into this. And as this is dropping, I'll start harvesting and taking profit. But, even from a wave count point of view, this 1932.65 looks extremely tasty. And if you haven't gotten in the market yet, then okay, great. But right now, we're looking at a really good entry at 1935.05, a whole number to 35 on a red candle break of the trend line. And in Hakinashi, I see a wick. Sometimes I'll, if I get a flat top, see, boom. So you get that flat top. You get the wick, but you get that flat top. And that's kind of telling you like, yeah, this is bear. So we're going for bear, right? And all the people that were long, they're taking profit. They're like, hey, man, I got my money. Greg held this thing through. Okay, great. But we took our money. But there's some people who think that this is a reversal, thinking that gold is going to go to 2,000. And then they, they're gonna be hodlers. They're gonna say, I'm hodling, I'm holding this. This is going to go to 2,000. I'm a gold bug, and that's where the problem lies with trading, with many traders, right? Especially if they are looking at one chart and they're looking at their phone, right? And they're looking for this to. So we've got two big candles, but two large wicks, and now we're coming back to RTTSC, return to the scene of the crime. Price breaks the trend line, price tagging the trend line from the backside. So let's see if we get rejection from the trend line, or do we get a break, a throwover? The throwover is not particularly cool, but it scares people, and then they try to get long. Sometimes it works out, sometimes it does not. If we use some type of a wave count, this could be A, B, and then we see a see you later. One last shot to take people, to take people out to lunch or take their lunch. And then we'll walk in the backside of the trend line. So the trend line is being respected. And even though we wicked outside of it, the body of the candle still held below, right? So the counter trend takes a little bit, some people see the dip and they say, buy the dip, right? And that happened to me trading Yahoo again, after making $300,000 in Yahoo, a $15,000 account back in the 90s. And you had the analysts coming online, Mary Meeker and Henry Blodgett. Well, Yahoo is going to go to $1,000 a share. And like, oh my God, got out, get back in. And then it goes up for a little bit. You're A down, B up, and see you later, right? And that's what so it ended my option career. So we always be careful when we look at these counter trend rallies. 1935-75, retesting the 50% retracement. Again, we have a supplies. Actually, I made it green, but really it should be red, right? How that works, right? No, we would have that red zone. Yeah, because you have this congestion here spreading out, but ideally you have this 100% expansion from this low, and we are looking for price to drop. And it's 12:38, and let's see if we are doing Bob Barker. Oh, actually, was it Phil Olson? Come on down. You're the next contestant. The Price is Right, right? And if you're trading lunchtime, counter trend, I used to call it the Happy Meal reversal, where we had this long trend down, and then we have this reversal at lunchtime reversal. I used to call it Happy Meal reversal, but the golden arches don't like you infringing on their copyrights. I don't blame them. And so we call it lunchtime liquidation, right? Where the guys who were short, during European session, well, how did they get out of their shorts? Well, one leg at a time. Ha ha, ring the bell. No. How they get out of their shorts is they have to buy their positions back, right? So if you figure they were short, who wears shorts? And they took their shorts, and now it is now dinner time. London's time to go home. Germany's time to go home. France's time to go home. How are we going to get out of our gold trades? Well, we have to buy them back. Buy our positions back. Now, as all these traders around the world are buying their positions back to go home, well, guess what? Prices start to rise. So it's not really rising on, I am so bullish on gold, even though there's some people who are looking at their phone and saying, look, an uptrend on gold, it's breaking out, right? But this is a result of not so much fresh new buyers, but it's usually a result of liquidation, okay? People buying their positions back. If you went short the euro and you made money and you want to get your money out, you have to buy your position back. You have to close it out, or you sell a stock. If you sold a stock short, in order to lock your money in, you have to buy it back. Now, that buying back causes price to rise, right? Especially if you have lots of volume, lots of liquidity, lots of people, huge amounts of people all buying at the same time, right? Now, you think buying is, wow, look how excited they are. It's like, they're trying to get out of their trades. They're not, so when they all get out of their trades, right? Well, guess what? It stops going up. And then it starts going down without those guys. So it doesn't probably go down as fast, but then it starts going down again because those guys are out of the market. They were holding the market up, and they got out. And now the guys are like, sell the rally, right? Just like buy the dip. You buy the dip. And when it falls down, you go, well, as it goes down, you got the guys coming in and saying, oh my God, it's at this price, let me sell, right? And so now fresh sellers come in, and these are fresh sellers that are going to hold it short a lot longer than the guys who, and that's what we can tell the difference between a counter trend rally and an in trend rally. Because the counter trend is going to be short because these guys, once they get their money out, they're done. And now fresh sellers come in, right? And then the guys who are maybe long and they had really tight stops, well, then the price is like hitting their stops too, right? Or if they were short and they were trailing their stop down, and they say, okay, I'm gonna move my stop down. Well, all these wicks are hitting their stops, and they're getting stopped out with money because they trail their stops, right? And probably the end of all the stop trailing probably ended right here, because they get what? They get to keep half of their money, right? Somebody say, hey, I'm going to get down, I'll bring my stop down to half, take half my trades off. And so this is almost exact halfway. Look, 50%. We're at the halfway mark. That's why the 50% Fibbo works, right? Now, occasionally get some people like, hey, you know what? This thing it's a dip in an uptrend. Let me go buy it some more, right? Okay, you guys haven't read the book yet, right? And so maybe they'll last for a little bit, and then starts flagging out. We get maybe another leg up, right? But now prices move from high volatility to low volatility. We did this big move, right? So now it's like, after you have a big meal, you sit around with a toothpick, you pick your teeth, you pat your belly, and you have to digest this gain. You're digesting. And then you have this accumulation or distribution where, they're building up sell positions, because you don't know, are they building buy positions or are they building sell positions, right? Well, in a counter trend move, these should be accumulated sell positions, right? So they're building. They're building the boat they're building the train to head south. They're building the southbound train. So they build. Once all the sell orders are all filled, then toot, train leaves the station, the buyers get crushed, and then we start, the buyers who are still long, there are buyers who got in here who are still long, they've moved their stops. So they've moved their stops up in the direction of the trend, right? That's what you're supposed to do. That's good money management. As prices are going up, so like Greg was like, no, these are going to be smoking really good in a bit, right? I have it on the grill, something I cook stuff, and my wife goes, "What's that?" It's like, it's gonna be fine, honey. It's gonna be fine. It's like, it doesn't smell good, doesn't look good. Just give it some time, and then boom, like, oh my God, it's a smorgasbord, it's a feast, right? So yeah. So they're moving their stops up, moving 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 stops up, and they move it up, and then they're going to get to the point where they're moving up into consolidation, right? And then prices are going to jump and hit their stop, boom, somewhere, and then those are going to become sell orders, right? Because the buyers, when they're long, their stops are sell orders. They sell to get out. Sell it, sell, get me out, right? Sell, boom, sell, and every time the sellers are hit, it drives prices lower. Boom, 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 right? So the buyers who have a stop way down here, and then there's a bunch of stops here. There's a ton of stops. Where are they? I don't see any order blocks, or what kind of indicator you're using. Just look at the price. If you have an elbow in price, there are stops underneath every turn in price. Every turn, there are levels and levels of you can use volume market profile and blah, blah, blah. But if somebody got long and placed a stop below the low, because that's what you're supposed to do, right? Like somebody's getting short and placing a stop above the high. So stops are building up here again, and then stops are building down there. That's why when we break those highs, those stops become buy orders. Those sell stops become buy orders. And these stops below here become sell orders. And that's why the Forex is a stop-driven market. You need stops to drive the market. You need stops to get hit. So when we have complacency in sideways markets, well, nobody's stop is getting hit, right? So wherever the most stops are, right, that's where usually liquidity start. They put that liquidity sweep and throw a wick at you. And then if that wick gets hit and it keeps going, then it just runs through, right? So here we go. So we got this here. We got red, green, red, green. And that kind of market you want to stay out of, right? This is like sucking on a chicken bone, right? I mean, you got a chicken, and here's the chicken breast. Nice meaty breast, delicious chicken, right? And then the chicken's gone, and now you're at the bone, And I've had people who I've dated in the past who would break the bone and suck at a restaurant. It's like they break the bone and they're chewing on the bone. What are you doing? Oh, well, there's good marrow in this bone. It's like there's plenty of chicken. Just wait for there's another chicken, there's another breast there. Go ahead, take my breast, take that chicken breast there, right? But and this is like the bones, your bones and marrow and gristle, or the rind of a watermelon is like, there's more watermelon. You don't have to suck on that white rind of the watermelon, right? But traders will see that and will go, okay, I'm gonna try to trade that. It's like, just wait till you get the meat, right? Wait till you get the meat of the moot. You don't have to they say, the Bible says, don't glean the field, which means don't go back in the field and grab every single grain of wheat that's out in the field. You've got to, leave something for the widows and orphans, right? So you get the big meat, you go through and you harvest one time, but you don't go through and try to grab every single pip out of the market. It said that bulls get fed and bears get fed and pigs get slaughtered, right? And the theme or the moral of the story is don't be a pig. So when you see low volatility or low vol kind of consolidation, it's best to stay away and you wait till we actually see a break with the people who have the British accent. It's like, this will break structure. I love when they say structure. You can hear it. Structure, okay. Lower highs and lower lows, right? So we break low, we had a high, then we break a low, and we have a lower high and a lower low. Well, that's structure, right? Because now we're making higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low, right? And now we're getting low, high, low, high, low, high, low, high. Well, no, you don't want to be in that, And I mean, you can use indicators like ADX and things like that, or you can just go ahead and just kind of eyeball it, zoom out, and then eyeball it, and and then look for the break of that zone of this area that we're in. We're gonna usually a low volatility precedes high volatility. Low volatility precedes high volatility. So we have this low vol area. We could get a breakout. This looks flaggy. They could break out and go north, but it's low volatility moving into high volatility, right? Or low volatility breaking down to high volatility, right? And that's one of the strategies we have, of course, called the samurai sword, where this is like the samurai sword and it slices through. We're looking for it's a breakout strategy. It's a course that we offer on Elite Traders University website. If you're interested in the samurai sword, you can either just email me at greg@elitetradersu.com if you would like to purchase that. 1935.74, and it's 12:51. So I was going to give it an hour. And if you follow me, if you go to my Facebook page, that's what I want to tell you guys. I'm going to be doing a webinar today at 8 p.m. Eastern time, and I really would love for you to attend. And it's going to be the lessons I've learned from Mark Douglas. And right now, he's probably rolling in his grave looking at these trades right now. It's like, Greg, like, how apropos that I should do this. So you say, what a hypocrite. It's like, yeah, I'm sorry. I'm human. I may make mistakes, but I had a stack of gold trades, and they were pretty good. Yeah, these are pretty good, right? I stacked it, right? So, and I stacked sells. I didn't take any buys, Jamie came in line, oh, I took a buy. Like, it was a pretty good buy. But I'd rather like the lazy river. I like just coasting along, and here, I'm like kind of like, maybe I'm sweating bullets a little bit because I'm trusting the trend can be a religious experience, because you have to trust something that has not shown up yet. But I can look over here, I can see weekly is down, and I can look at my daily is down. Oh, sorry, go back here, go back to my, yeah, I can go here and walk. I can walk. That's why I keep two charts up, because see, this red is giving me confidence that we should come back down and actually do some dropping, right? But yeah. Let me go ahead and mute this for now. Okay, I will call you back. Okay. All right. Yeah. Okay. And all right, I am doing a live trade here. Okay. Lunchtime. Okay. So we are, if you come over here to our Forex webinar, in fact, that's me and Mark Douglas and I, or me and Mark Douglas. Yeah. In fact, no, he was my mentor. And when he saw my strategy, he was very, very impressed with the strategy. And I invested in his training, and it wasn't cheap, it wasn't free, it wasn't very long, but it made all the difference. And I more than made more money than he ever would charge me. And if I would have waited, well, unfortunately, he passed away in 2015. And so I took the opportunity to learn from one of the greatest minds in technical analysis and trading. And that's why I'm here, is because of what he gave his life to do. And I'm actually going to be sharing in a webinar, Mastering Forex Trade Lessons from Mark Douglas. That's going to be today, August 3rd, 2023 at 8 p.m. Eastern time, from 8 to 9:30. Okay, we're going to have a question and answer for 30 minutes. And you can register at Elite Traders Live, elitetraderslive.com/regs. Come over to there, and you can register for this webinar, and I'll be sharing with you the powerful lessons that have garnered my success in trading. And I hope to see you there, hopefully, and you would get much benefit from that. And tell a friend. It's absolutely free. There's no charge for it. Just putting out some good, valuable, free content. Lessons that I pay thousands of dollars to learn, that you can learn for absolutely free on this webinar. So I look forward to seeing you there. Tell a friend, give them a link, and let's learn together. Okay. And so let's. So again, August 3rd, today, right now. So register. Hey, Eastern time. Right. Okay. So here we go. We are in the red zone at 100%. And still eking around there, and it's 12:56. And usually there's a lot of program trading. A lot of my students ask me, what about AI? What if AI takes over? What if the dollar becomes digital? How would that affect Forex trading? Well, the great thing about my system is that it's agnostic. It really doesn't believe in, but you can use it for oil, you can use it for gold, you can use it for euro, you can use it for stocks and commodities, you can use it for sugar, corn, wheat. The strategy is can work on many different markets. It works on every market, and like I said, I really haven't changed anything in the years that I just added Hakinashi, and even then, my student Jamie watched one of my old videos and said, "You used to use Hakinashi, Greg, and you were killing it." Like, yeah, I got rid of Hakinashi because a lot of people were so into Steve Neeson, and God bless Steve Neeson. He brought Japanese candlesticks to the U.S. in 1994. But there's so many, there's 1,000 different chart patterns, 1,000 different names. Each, they got the 3 black crows and 3 white soldiers, and then you have the morning stars and evening stars, bullish engulfing, spinning tops. And I just want to get into a trade. I really don't want to learn another language, right? I love Japanese food. You give me some sushi, but as far as learning all these different patterns, and a lot of them were distracting. I found it very distracting. And so I just wanted something that would smoothly identify the trend. And this is a lot of people, when they see this, they're like, oh my God, Greg. It's like, yeah, and you just basically just follow this, right? So again, this is why I did, I think I had one loss this morning, $822, right? Right now I'm floating some heavy losses right now. And again, I'm in the direction of the trend, and I'm looking for prices to come back down and retest the 1932.79 area. And I think I even mentioned that in my in Bulls versus Bears weekly Forex forecast. And make sure that if you can watch it on YouTube, but you can also get access to the replays from my weekly webinars. The weekly webinar that I'm doing for talking about the lessons I learned from Mark Douglas is just part of a series of free webinars I'm doing every Thursday. And we're actually taking those, and a lot of people they miss it, they're working at 8 p.m. or they're gonna watch it's gonna be me versus the Cleveland Browns and the Jets. Yeah, I don't know, maybe you wanna watch my webinar, but in case you're gonna watch the Hall of Fame game tonight, and I always miss it, like August, when's the Hall of Fame game coming on? And now I know it's gonna be at the same time I'm gonna be broadcasting 8 p.m. Eastern time. And hopefully we'll be in a little early so we can watch the game. But you can go ahead. We have a place for recordings, and it's actually it's called Forex Baby Steps, and it's a way to get access to if you're brand new to trading and you really don't want to spend a whole lot on mentorship or anything like that, or you just want to find out more about how I teach, and you want to hear in a concentrated area. YouTube's kind of a noisy place, but you can come over here, join Forex Baby Steps community. It's just $7 one time. No, you're not going to make $1 million for $7, but you are going to get some good teaching about Forex, so you're more familiar about Forex and the economic markets. There's you get access to the weekly training replays. It's the only place we don't put the replays on YouTube. The replays are here. Get access to a whole Bulls versus Bears series library, and then the Bulls versus Bears newsletter, where we take the highlights of Bulls versus Bears, put it in a newsletter form, and there's going to be exclusive members only pricing on Elite Traders products. So lifetime access is $7 just one time. It's not a monthly fee, just $7. You can go to 4X, the number 4, the letter X, babysteps.com. Okay. Yes, it's a ripoff of Baby Pips, but it's Forex Baby Steps, right? So you can go ahead and go ahead and register, get access to that content, and we're going to be adding more content. We're going to add a special, working on a course, help technology challenged, mature people. I'm calling you seniors, not a senior yet. In fact, I'm avoiding AARP. But they give good discounts. I'm gonna carry the AARP card, right? And now you're old, right? Anyway, but I don't care. Approaching 60, and I'm looking pretty good. I like it. But I started hacking using computers in the 80s. During the whole War Games movie craze and 8-bit computers. So I've been with computers basically most of my life. But a lot of people, you're just now getting into computers. You avoided them. Now you're looking at maybe your job, you're losing your job, or you're retiring, or maybe you need some extra money, but you can't drive a truck anymore, or you can't do construction work anymore. You can't lift up furniture anymore because you can't put in floors. Your body is not, you have the mind of a 20-year-old, but you have a body of a 50-year-old, right? And so trading is the best thing that people who are mature in age can do. Why? Because you don't have to use a lot, if you can control a mouse, you can control your income. Okay. But it's a skill set, and you have to have a computer, right? Gone are the days where you can call on the phone and you have to look at the monitor, you have to look at the charts, you have to load different types of software. And a lot of that I find that with my students is not my system that's complicated. It's not the process, the procedures, the strategy, but what's actually challenging is the technology itself, right? Booting up a computer and actually updating it and dragging a file and copying it and right-clicking. When do you right-click? When do you left-click, right? Having the right computer, because if you go to a computer store and you've got any gray in your hair, they're going to try to sell you some really dinky, here, you're going to just answer emails and look at your grandkids' pictures. So you're going to be trading against multi-billion-dollar corporations and hedge funds and banks using a Windows NS computer, right? The NS is the safety computer where you can't load anything on it because they know that older people load stuff in their computer, they're going to get a virus, and then they're going to. So they just made a complete lockdown version for seniors. I think the S stands for seniors, right? So they can't screw it up. But you get on Zoom, you can't, it won't access the camera because it's protecting your privacy and all kinds of restrictions. So you got to know what kind of type of computer to buy, right? You want a fast processor, Core i7, and we're going to create a whole course on that, like what type of technology to have, I was talking to one young man, and I was, helping him with this computer, and his internet was so slow. Oh my goodness, it was like dial-up. Oh my God, like, are you kidding me? This is like, and then so I took him to broadband speed test, He had 17 megabits per second on Spectrum, okay? This guy's paying $75 a month, and they're robbing him of his speed. And he only says 17 megabits per second, right? But how many people check their speed, right? You think you're getting what you pay for. And I'm saying that if they've been giving you 17 megabits per second and you're supposed to get 100, and they've been doing that for months, then you deserve a refund, right? So, but they know that you're not technologically, they know that people of our age are not technologically savvy, and so they kind of cut corners on us. So this course is built in a way for you guys to, that's going to be part of this community, so you can at least get your computer straight, right? Get your computer straight, learn about the markets, and then if you want to learn how to actually make money in the markets, well, then that's that's the next level. But at least we get you on even footing with those young whippersnappers out there, right? So that's that. So again, forexbabysteps.com, just $7, and one time, and we're going to be building out again we're going to have our technology for seniors course and some other free courses to get you ready to onboard. And then once you go through, you might say, I don't think this is for me. But $7 to find out it's not for you. It's $7, All right. All right. Let's see where we are here. Okay. So we are, we dropped, we to the 100, we dropped. Okay. And we wicked down while we were doing our little talk. We could have got out of the trade, but we're actually looking for it now. This is where I told you we're coming to structure, right? Lower high. We have a high, a lower low, and a lower high. We need one more lower low, probably below 1934, and we should see maybe a cascade of prices down to the south side, right? So it's 107, but guess what? It's lunchtime in New York, right? And London being one of the largest gold market, well, they're closed too. In fact, it's about 9 o'clock there, something like that. No, it's 6:07. Yeah. So they're home, right? 6:07 London, 10 here in on the West Coast, and it's 1:07 Eastern time. So we get the traders going to Cat's Deli, and they're gonna get their sandwich on, right? And then they're gonna come back to their desk. And he said, now it's very interesting because when you have bots, the bots have taken over, and so even though there are fewer human traders trading, the bots mimic the activities and habits of human traders, right? So that's what people were asking. Well, what happened? Well, the bots are programmed by humans, and they're doing the same things that humans did, except they're going to be probably a little bit more consistent because bots don't get hangovers. They don't have fights with their spouse. They don't have stress and pressure and other distractions, and they don't scroll on their phones, right? So here we go, right? So they don't have those types of distractions going on. So it's going to be trading's actually, the more computerized becomes, the easier it'll become for humans who are still trading, who are learning now. This is the time to learn. The time to learn is now, because you can exploit this stuff, because computers will take it up and computers will take it down, and they're not going to get too emotional. They just know that, and 8:30 a.m. is news, and there won't be any news, but because it's 8:30, the bots will just start closing positions out and taking positions. We've noticed that even when there's no news, we find out that the market starts getting very volatile on the hour. Like it's 1:10 right now, right? See, it's 1:10. We just had to hit the hour, and on the hour we change direction. On the hour, right? At 20. This is NT4 time is Central European time or something like that. That's 20:05, and this is 20:00, and so we add a change in direction at the top of the hour, right? We went from higher highs and higher lows, and then the hour change, if time hits 20:00, change direction, and the bots are taking it down, right? So just think, and that's, I'm giving you a little mentorship lesson kind of thing, that we can get in on the time, right? Study time. When there's a lunchtime end, in fact, I have a day trading block right here. You can see it behind me, it's different colors. And it says red, most dangerous time to trade, green, traditional day trading periods, yellow, S&P futures reversal, and then it says lunch ends at 2:15, right? Bond market is open and they closes at 3, right? So you get the volatile markets during the so this day trading clock shows for we're in that mid that doldrums, that red, but we can see that now. We're coming on down. Come on down, Bob Barker. Right? We are moving on down. Moving on down, moving on down. It's the Jeffersons backwards, right? It's moving on down, like moving on up. Well, I'm sharing the right screen. think I am. We coming on now? Here we go. We're in the money on some of these. Coming in hot. All right, so it seems like it likes that when we play the theme for the charts. It kind of likes it, right? And this is our line in the sand here that we're looking at. Our structure. So we can break on down through there. Yeah, no, beat the spread here. And you can see that right on that line, a bit nice. And we're XAU USD. $19.34.85. 86 by 11. Big spreads on gold, but big spreads usually means a fast moving. So we hit that green area and we bounced. But see, now we're on the other side of trend. Oh, I don't want to do that. Okay, escape. Oh, no, okay. We want to put a trend line. Trend line is what I'm trying to do. Okay. So we're retracing against this move. Of course, we have and then we come up to the 38% retracement. Yeah, twin wicks at the 38. We tagged the 38 twice. If we can get a red candle out of that. All right. I'll do it twice. We can stretch that out a little bit. And then we got let's see if we can come up here. $34.86. We need to get on through, break on through to the other side, break on through, break on through. I'm going to sing because if I play it on the video, then they'll probably give me a copyright violation. 34.92, 96.13. Yeah, the big announcement is tomorrow is non-farm payroll. We have a lot of fun in mentorship. We have a lot of fun. We have a really vibrant chat room of really active traders. We have a 3-step process for teaching people how to trade. Stage 1 is simulation trading, where we actually practice in a simulator. You get free access to a simulator. It comes with the with mentorship. And the whole idea is for you to get 90% win rate in with no more than a 5% drawdown in 14 consecutive days. And when you do that, you get a really cool certificate suitable for framing. And that is a really great accomplishment for people because we're data driven. We look at the data and results, and we have this 3-stage process that now you have confidence. You learn the patterns, you learn the actual trading strategy, and now you're that you've really learned the strategy. We take you to stage 2, and stage 2 you'll get a certificate, our stage certificate for completing a demo. In the demo, the whole goal is to double your account with with no more than a 5% drawdown, and about 85% win rate. Okay, so a lot of traders, they don't stress win rate. They say, well, if you can win 4 out of 10 trades and use a 2% risk reward ratio, it's like, yeah, you lose 6 trades in a row, like I'm probably not going to be very happy, right? These are my my students there, and all of them have over 90% win rate in simulation, and or have doubled the demo account, or have doubled a small live account, right? And so we have lots of there's videos, testimonies for each one of these our students, right? In fact, let me go back here. So we have lots of happy clients, and not only that, but they after they pass our challenge, we actually put them through and help them pass their like they pass their my Forex funds, right? So they get certificates for my Forex funds. And so you can see that because we can forecast the market. I know my mentor Mark Douglas, he said that you don't we do deal with probabilities, and the thing is we try to find the highest possible probability setups to trade. And one thing is to look at that higher time frame. That's going to give us that edge, right? It's going to give us that edge in the market. And we can see we walk through this whole process from counter trend trade. Now we're back in trend, right? We are back in trend, and as we are back in trend, it's a lot. We can breathe a little bit easier now that we know we have a probability of hitting our target down below for a goodly gain, right? And especially if we get a trend line break on this 1 hour, which will maybe about 2 o'clock, it might happen, right? We've been on for a bit right now, and I want to actually like to see these accelerate through, and these would have been like great trades here where we are. And again, this is a 1 minute chart, the 1 minute, and then we go 1 minute, we go usually 5 time frames higher. We went to a 5 is our higher time frame chart, right? In line, people say, well, short-term charts are really risky, Greg. It's like, yeah, but the whole idea is you line them up with the weekly, daily 4-hour, that trend is down, right? So that's the method of my madness is I'm going to short-term day trade, right? I'm going to short-term scalp this, but I'm going to scalp in the direction of the market, where these could actually turn into trend trades, right? Now, if I were to hold these, right? If I hold these, then I'm in line with the trend. Then I can get 100, 200. I just got 120 something pips on the Aussie dollar this morning. right? So once I'm in trend, then I can breathe. I can breathe easier, knowing that I'm on the lazy river. I've been to Schlitterbahn, which is one of the largest water parks in the U.S., and they have this thing called the lazy river, and you get an adult beverage, and you get in your inner tube, and you plop down in the water, and it just takes you down the lazy river, right? Just takes you down the lazy river, and you say, well, that's not fun. I want to swim against the river. You try to swim against that thing, you're gonna wear yourself out and get really tired, right? Maybe it's good for exercise, but that's not what I'm trying to do. I'm not trying to swim against the trend. And believe me, you probably see some of my old videos. I have swam against the trend, and I'll swim against the trend like with major size, and that'll be my entire trade for the day. And so this is kind of a more easygoing approach that we've really mastered in the winner's circle. That's my mastermind that I have with about a handful of students that I work with. I train with them 2 hours a day, 3 days a week. It's not cheap, it's in the $50,000 range. But they learn a lot because I make them mark up their charts and teach, well, Greg, you're lazy. You make them pay all this money for them to teach you. It's like, yeah, because when they teach me, they're going to have confidence. So when they go in the market, it's like, boom, right? And so that is a powerful part. And we do a little bit of that in mentorship, but because mentorship has more people in it, we can't have that kind of intimacy. We can do it. But a lot of people are shy and they don't step up. So usually they're pretty content watching someone else. Oh, I'm not going to go up there with Greg, So they will I say, okay, we'll share your screen, walk us through. You're the pilot. We're going to trade along with you. And my goodness, Joe, I didn't press the record button, and going, oh my goodness, Joe was on fire yesterday. Joe was one of my students. And he basically he just methodically got in and out. And I'm like that's I was so proud of him. It was just like my kid, It's like, yeah, look at my kid go. I'm so proud of him, right? I think I got a screenshot of him. I didn't, usually I have like an assistant or something that is online with me. So they remind me, Greg, make sure you turn this on. And I go, oh yeah, that's right. Yeah, so and he has a big wide screen. He has big 3 charts on, and that's him. That's Joseph. And and so he had win after win after win after win. I go, just like me, but I didn't say anything. He took the trades himself. And that's the whole point, is to teach you how to fish. So, you'll be able to run your own hedge fund. And that's what I'm trying to do. I'm not trying to make you dependent on me. And that's what a lot of people are trying to do. Everything is trying to make you dependent, make you lose control, whether it's pharmaceutical drugs or dependent on, government aid. Everything wants to make you dependent. The independence, then you have control. And my thing is, I'm giving you the ability to fish on your own, so you can, something, God forbid, I retire and not want to do this anymore. All of a sudden you won't say, oh, gee willikers, I wish I would have learned, I just follow Greg's signals. Like, no, I'm not throwing fish at you, I'm teaching you how to fish. So you go in the market, you can pull money on demand. Money on demand. Those like pizza on demand. Love DoorDash. My God, you're in Vegas and DoorDash, and they deliver White Castle to your front door. It's like, come on now, paradise. Let's call this Paradise Valley. This is Paradise Valley. So money on demand, where you can get in the market and you can actually just start taking. So you can look where we walked through the whole process, and I just wanted you. I had some guy. I'm not going to mention his name. He's going through a tough time. And I just reached out to him. Hey, guy, how you doing? It's Dr. Greg. Dr. Greg, you're a faker scammer. Like going, faker scammer? I mean, golly, I just asked how you were doing and if you need help with your trading. And he's like, you're a scammer just like everybody else. I go, I am? Yeah, your returns are fake. I go, yeah. that takes a lot of artwork. I'm not much of a, I do a little, I can operate Canva and stuff like that, but I can't fake video, guy. I'm sorry. And he goes, I'll join you if you show me your returns. I go, wow, you just insulted me. Do I really even want you in my community? I know his father-in-law died and he's going to lose his ranch because he bought some commercial property and he got overextended. So he's under a lot of pressure. I completely understand. But still, you don't have to be nasty, not when I don't need your money. I don't need your tuition. I'm just saying you were interested. You talked to my sales rep and said, well, if I could just talk to Greg, I'd love to be, okay. He's a fan of Greg. He's been watching me for a few years. I've been doing this for like 30 years. And I've got YouTube videos all the way back to 2009. And, connected to like brokers and things like that. It made me sad because, I really wanted to help him. I knew that, this system is really easy. You can count to 5 and you know your ABCs and you know your colors. You know your ABCs up to C and you know your numbers up to 5. You can make money at this. I mean, look, I'm a kid from South Central LA. Black kid from South Central LA. Okay. There's no brokers or people in my family like that. My dad was a butcher and my mom worked at a shoe store and she became a teacher. And so I didn't come from a super high smart, we were street smart, but we weren't like, doing PhDs. I'm the only, PhD in my family. So I'm just saying that I taught middle school, and I taught middle school kids, gang kids in South Central how to do this. Okay. I taught my 85-year-old father-in-law, God rest his soul, how to do this and how to have a nice retirement. I taught my twin daughters when they were 6 years old how to do this. I've taught people who are nearly blind how to do this. I taught a one-armed trucker who lost his arm. I was at the brokerage and he was like saying, he was like looking for Greg McLeod. I'm looking for Greg McLeod. I was like, what? Why? Well, I lost my arm in a trucking accident. And so I can't drive a truck anymore. I was watching Pip and Run and I made $25,000 watching you trade. And I just love me some Greg McLeod. I'm like going, that is so cool. It made me tear up. I'm like going, he says, he got some severance pay. He got, hit by a truck, but yeah, you got the money, but you lost your arm, It's like, I wouldn't. And so that's what I realized. I go, this thing is, what I'm doing is transformational. Me just sitting, in a penthouse and drinking margaritas on a beach somewhere is just not what God called me to do with this, right? But I've given this. I've had people. I had a really wonderful lady who was, she was helping the homeless, and probably seeing me, go down and go work with her, and I said, you know what? You're a person who I think this course will really help. And I gave her the course. And she got busy, life happened, things happened, and she never did anything with the course. And I kind of realized that I made the mistake of giving the course away because she had a good reason instead of having her put some skin in the game. And you have some skin in the game, you just do better. It's hard you get stuff for free and it ends up on the shelf. But when you actually do something with it, and you have your money, they look at it, I get my money worth. I get my money's worth, right? So when we raised the price of mentorship, more people were successful, more people paid attention because they had money invested and they wanted to get an ROI. They want to get a return on their investment. They didn't want to spend 5, 10, 15, 20,000 bucks, 50,000 bucks to just leave it. They're like, oh my God, I'm wasting money. I got, and they'll do something with it versus, I got it for free. I'll take a look at it later. And it's 20 years from now, right? I got something for you. I actually bought this off of eBay. It's called Forex Made Easy. It's circa 2002. Look at that computer, right? Green arrows and red arrows, right? My inspiration. I'm trying to keep this stuff simple for you guys. I got it for $15 online. And I'm just saying that course was probably a couple of thousand, $4,000 or something back in the day, right? Just people do when they don't put their have skin in the game. So it was my fault, my fault. He said, well, Greg, you're being nice. It's like, no, Jesus said you always have the poor with you. Judas said, hey, she should have taken that perfume and sold it and given it to the poor, right? And Jesus said, you'll have the poor with you. Because if you have a poor mindset, then it really doesn't matter if someone gives you this super high-powered winning system. If you have a poor scarcity mindset, it isn't going to work for you. It's not, right? But when you have value and you actually, do something with it, and then you are going to work a lot harder, right, to make it work. And so that's why I don't love that, because I don't need the money for it. However, you need to pay, because you know that if you don't pay, you won't do anything with it. And if you don't do anything with it, then what's the use, right? So people don't understand. They go, yeah, I'm not giving you this money. You're not giving me that. We've got overhead. Pay for servers and salaries, but what this does, it puts a burn under you, so you'll perform better. That's why I get those types of results. That's why I have tons and tons of people making, big time money, right? Another young man, I'm not gonna mention his name, and he actually met one of my students, John Miller, who's he made a couple $1 million, right? Trading. He lives in a penthouse right across the street from the Google headquarters in Austin, Texas, on the 57th floor. He's so high up that when you're in his apartment or in his condo, that if you look down, you see a cloud. It's like, oh my God, you see, there's a cloud down there. Yeah, sometimes it rains down there, but it doesn't rain up here. I'm going, that is wild. Well, anyway, he referred me to a friend he met at a bar. They invited to a barbecue. And so the guy actually went to John's place. John had big giant steaks. They went by the pool, all kind. So you could see his lifestyle. He says, "You've done forex trading. My mentor. This is the reason why I have all this, because of my mentor." And so John sent me a message and says, "Hey, I got this guy. He's interested in forex trading. Friend of mine. We hook him up." I go, "Yeah, sure." And the guy he's not an entrepreneur. He has a store, and he goes, "Oh, I want to check this out. I don't know. I've been burned in the past. I don't think it's I just got to do my due diligence." I'm like, due diligence? You have a friend who lives in a penthouse and is not renting. He owns it. He's not renting it. It's not like it's a Airbnb. It is. I remember when he closed on that place, right? And plays across the street in the other building, right? And so you met him, you faced him, you talked with him, you ate his steaks, and you asked him what he did. And he told you that he was a forex trader, and then well, I don't believe that you can do what you can do. You do. So all this is fake. Right? Everything is fake, right? All this stuff is fake. This is all Photoshop. I'm drawing this really fast, right? I said, you know what? Maybe this is not the right opportunity for you. Because if you can't pull the trigger on an opportunity that is something that is in your face and you don't take it, then you're going to miss this type of an opportunity where we go from green to red. You're going to say, I don't believe that's going to work. And you're going to lose money on a system with a 90% win rate. So I don't think this is for you. Maybe, punch a clock. It's okay. A lot of people punch clocks and it's okay. Right. And it's fine. My dad punched a clock. My mom punched a clock. There's nothing wrong I mean, our society is made punching the clock. Because why? Because they don't pay you what you're worth, and they'll never pay you what you're worth because they have to give it to their stockholders, their stock, their, that's what happened. It looks like the market has like stopped or something. And we just like halted. 1933, 35. Let me check another platform. We should be. Let me refresh. Is there a refresh something around here? Refresh. Yeah. Seems like price is changing. 35.62, 34.38. I don't know. Refresh. Those dirty market makers. Those. Come on. Rescan servers. I don't know. 35.62. I think we're out of these trades already. Yeah, because I'm on C Trader. C Trader is my C Trader is my MT4. I mean, yeah, I'm up 31 pips here. Well, 30 pips there. Something's going on. This is frozen. Okay. I hit the restart button. I don't know what's going on. I should be out of these. $30, 35.62. We're at 34.66. Okay, let me try refreshing, guys. Wow, my Zoom is frozen. Yeah, I'm gonna close this. Okay, I'm gonna close this. Okay. Not sure if I'm still on.
So you think you know Wix, but do you really?
Okay. And I'm just closing. Okay. And maybe I can go back to here. Wait for a response. Yeah. Okay. Yeah, I'm not sure what's going on here. Okay. No.